Welcome to the AVID Investors Club Market Update. I am Stacy McBain with Swope Investment Properties, and here is what is going on in the rental and real estate market. You guys ready for this? Vacancies went back down. Last month, I had reported that they were up a little bit. We were right here, but as you see, they've come back down, and historically very low. In general, the rental market is holding strong. According to Melissa Sharon at First Rate Property Management, who I spoke with today, that low vacancy is a sign of strength, and then the rent steadily increasing. That's been happening, and we've seen it as investors. It's helped support the increasing in pricing that we've had to deal with. Those increases in rents have been trying to keep up and keep our cap rate fairly steady. The multifamily market, rentals are going faster right now with higher rent increases than single family, but Melissa and the team at First Rate expect that to change as we get into spring. In Idaho, a lot of us time our vacancies for the spring market, but especially that single family home market. People really seem to tend to move during the spring to summer months. And, you know, for anyone with children, that certainly makes sense, doing it when school's not in session. And that's probably among the reasons. The big story with rentals right now is renewals. A lot of us here have rentals, and so you've probably faced this. How do you handle your renewals? Because you want to reward good tenants for staying, and we want to keep good tenants, and we want to be good humans, but do you keep your good tenants, or do you bring your rental properties up to market rent? Because a lot of times, if you didn't just barely rent it, and they've been there for a while, you've fallen further and further behind in your discrepancy between current rents and market rents. So as you're evaluating properties for purchase, that's what you're seeing. Here's the actual rent, here's the market rent. Now, the best time to change rents is, of course, drastically, is of course on a move out. But what do you do with your renewals? And so they are looking at it on a case-by-case basis and asking owners what they think. And I'll throw this question out to members. Do you have any strategies that you're doing? I've seen one where one property management company was taking the difference between market and actual and splitting it and raising it to there. They still fell behind. So now they're taking market rents minus $100 and going there, and that's still generating some fairly significant rent increases. So tenants are getting hit with $100 rent increases at times. Any other strategies among the members that you guys have been seeing?
Well, we're seeing differences of $400 a month sometimes in some places. And so what we're doing is we're limiting the increase to $100. And then when it changes hands, we rent at market rate.
Yeah. Anything over $100 of an increase is just really tough to stomach for tenants. And so it just feels like you're kind of asking for a move out at that point.
Yeah, same strategy on my part.
Thank you.
It's under 100 market on a vacancy.
Okay.
A strategy I use to maintain is to make sure it's under market rate, but I always give them 2 months notice. And they seem to really appreciate that, and I'll do it sometimes incrementally. So if I want to increase by 75, I may do it 25 a month until we're up to that 75 increase. And tenants report that they appreciate that.
Good idea, Bobby. Yeah, thank you. Boom. Okay, now this is what we're seeing from NARPM's data on what rents are actually doing. And as you see, they're up. They've been going up. This is Ada County, multi and single family, and this is Canyon County, multi and single family homes. Now, this is all based on who's got vacancies where. So the data's not always perfect. Looks pretty good. We've seen a lot of newer stuff being rented in Canyon County. So maybe that's why this one bedroom is so much more expensive in Canyon than Ada. Could be newer inventory. So this isn't, an exact science for pricing your rental, but this is what we're seeing rents generating. So when you're looking at those market rents, if you want to see where they compare, this is a fairly decent gauge right now. Now in the sales, duplex and fourplex market trends in Ada and Canyon County, we saw another decrease in inventory. We had a couple more fourplexes come on. Pending deals dipped. You know, it requires inventory to go pending. And then sales also dipped, with Ada County duplexes being 7 of the sales and of the 15 or 17. Sorry, 15. And then absorption levels, this is the story with absorption. When it's at 1 month or less, it's definitely a sign of a seller's market. And so the laws of supply and demand are telling us that we are buying up more than we're buying it up quickly. So we're still seeing a seller's market here. In terms of averages, the average fourplex, the average fourplex price, it skyrocketed. We went above $1 million last month. And in part, that's because there were 2 brand new fourplexes that sold in Ada for $1.3 million. So that affected that spike that you're seeing over here in February's data. Overall, though, the cap rates have been hitting 4% pretty consistently. That's our 6-month trailing average. February was a little below 4%. And again, not surprising with those brand new properties selling. The newer properties, of course, tend to be slightly lower in cap rate, and then the older ones should have a little bit higher cap rate. And the days on market, we're still low. It's gone up a little bit since 2021, but not too much. Now, the gross rent multiplier, that's the ratio of the purchase price and the rent, and the lower number is better on this one. The GRM actually went higher and it spiked to 216, where the trailing 6-month average was still a lot closer to 200. So you can see how that trend looked. So rents falling behind a little bit in purchase price there. What's going on right now? What do we have active right now? Well, we have that fourplex that's active on Halstead, and then we've got one more in the pocket that's going to come back online at some point. This Madison property is 4 units, and it is kind of also in that same area where that Craftsman North End property that I mentioned at the beginning is, at the beginning of the presentation, although this one doesn't have the curb appeal. It's kind of ugly, but has an owner occupiable unit as well and some smaller spaces. And so, you know, it's not always about the curb appeal as well. So that one is coming on a little bit lower than we'll probably bring on that Craftsman. Brogan, and I don't love those fourplexes, so we won't really go into that. And then we have a couple for sale in Nampa, one of which is above $1 million at this time.
Yeah, Brogan,
our current active fourplex market.
Excuse me to interrupt.
What's that, Harry?
Brogan want all cash offer. They don't accept any loan or something.
Yeah, and you know, that area is a little bit, those were actually built as 8plexes, but then sold as 4plexes, a lot of those. And I don't love that. So you're kind of sharing a roof with somebody. The parking there is not ideal. It's a little crowded. And so I usually, and a lot of times the age has been attractive of those, or the price sometimes formally would be attractive. So people will ask me about those. And I usually call them off those broken fourplexes.
Stacy, what does the green up arrow mean?
Oh yeah, that means the price went up, but I think that was a listing error because it just hit the market today. It has 0 days on market, but they listed it at 980 and then remembered that the price was supposed to be 988,000, I think what happened. And so they changed it and it created that arrow.
Thank you.
Mm-hmm. And then here's 5+. So there's a lot of money in our market. And so for those looking for bigger deals, what I'm finding is you're not necessarily getting an economy of scale payback. You're not getting a higher cap rate just for scaling. And so here's a few examples. This Overland, they ran the pro forma at a 15% expense ratio, but that's low. And so if I edited their data, I didn't have a ton of data, but I just changed the expense ratio to 35%, and that put the cap rate down to 3.28%. The $3-ish million 24-unit property, that sounds great, except it doesn't actually include the building. It's the idea and the land and maybe some plans or something. And then the $3.5 million 7-plex, that's, I mean, those are nice. Those are going to be nice. That's $510 per unit, $510,000 per unit, but you're getting 7 2-bedrooms, 2.5 baths, 2-car garage, attached garage townhomes off of Ustick near Maple Grove. And there's going to be some other similar stuff in that community, a couple single-level duplexes. So $510,000 per brand new townhouse. It doesn't offend me, but we've been picking up some townhouses lately with investors, and we've been getting townhouses with maybe 3 bedrooms or maybe 4 bedrooms for something that starts with a 4. And, you know, and so that price doesn't thrill me. Now, that doesn't mean I could still find those townhouses starting with a 4. So I'd have to see if that anything close to that's available. But, you know, none of these are a screaming deal. Let's just put it that way. So I think I'd look at some other things myself right now. What's that?
Can you go back, please, one slide? What is the last one? Area, square footage, or what? After DOM, what is after DOM, what is last column?
Oh, days on market.
No, the next one.
And then this is square foot.
Next one. No, the other one. The very right one. One more. One more.
Oh, I can't see it. I'm sorry, Harry. My my tiles are blocking it. That's area. And that's just the real estate area that it's in. And so the Nampa one's probably 12 something. That's the Nampa real estate area. Area 400 is the bench. And so it's.
Oh, that's coding. Okay, understood.
Mm-hmm.
Thank you.
Yeah, you're welcome. Sorry, I couldn't see that on my end here. Well, folks, we finally hit $550,000 on our median price of homes here in Ada County. It's a new record. So we are getting higher pricing, but fewer bidding wars. So while it is still a seller's market, the sellers have been pushing the price up, and folks are not willing to pay as much over asking as they were about a year ago. A year ago, and also it's not spring. Who knows what happens this spring? But we are still seeing a lot of properties that are selling for very close to asking. It's not a market where you're coming in 5% below asking and scoring a house. You may not be going 5% above asking, but the median closed price is 99 point something percent of asking. So it's right in there. The days on market is indeed down from last month. So like I was saying, we had that sort of cooler period in winter, and then it really actually, that ended. It like spring came in February and everything sort of sped back up. And another interesting indicator here is we had a nearly 63% increase in inventory year over year. So that's a big number. So that's something to take note of, and just put that number in your back pocket. You know, that could certainly, the laws of supply and demand matter a lot in terms of real estate. These are Ada County's numbers. If we look at Canyon County, we're going to see the median price of homes is about $100,000 less, you know, so a little more than that. And we had a drastic increase in the amount of new construction. So that market data, this median price is going to be your existing homes and your brand new construction. But a lot more of that data is brand new construction. So the new construction is helping make up the inventory shortage that we've had. And here also, you can see where it's coming online. And then, of course, the big story of the day. Heard that the Fed increased interest rates, and so I reached out to Idaho Central Credit Union. I really like working with these guys. They're good lenders. They tend to have good rates, and asked them what was going on. What did it look like? And so I'm always asking for non-owner occupied versus owner occupied, which obviously there's a difference. One of the big reasons I love it when folks buy a duplex for their first home, they get that owner occupied rate. They can, if they need to, they can bring in less money and they don't have to live there forever. It's a good strategy. So with non-owner occupied right now, there was a slight incentive for putting down a little more than 20%, which we've been recommending since the cash flow has been low. We've been recommending not over leveraging and putting a little extra money down just to make sure you're not reaching in your pocket each month. But the owner occupied rate is up to 4.25% right now. And the investor rate right now looks really high with them at above 5. Now with fourplexes, most of those are non-owner occupied, and you'd be putting 25% down and you'd be at 5.625%. And that would be with an additional a closing fee. So this is a reactive interest rate. She thought that this was Natalie who gave us this data, and thanks to her, she thought there is a chance that things could calm back down. Sometimes there's a sharp increase and then it softens up a little bit after a big announcement. But this is certainly different than what we've been running our numbers at. I haven't run investor numbers with a 5 for quite some time. So this will affect buying power, of course, right? And so fairly significant. And so how will this affect buying power? This is a chart that doesn't really reach the spot that we're at. So those payments are only principal and interest payments. So if we were at 4.25% for an owner-occupied loan, and there was a $400,000 loan, that payment is going to look like $1968 right now. And a $360,000 loan at that owner-occupied interest rate, it's going to be $1,771. Now, the median price of homes in Ada is $550. And so if you were to put 20% down, that would be a $440,000 loan. So somebody buying a median price of home, a median price home in Idaho right now is looking at nearly $2,200 before you factor in their taxes and insurance, which is a big number that you would add on. So folks who are taking on home and home ownership for the first time have a big commitment to make here. So yeah, that's something to think about, especially since a lot of the folks here have owned homes for a while. We're onto investment properties, and so I bet this is a lot higher than any of your, you've probably got a fourplex with a lower monthly payment than that. So big news there.